Jerome Powell just scared the markets last night when he came out with his comments, and today I want to go right through this information and explain to you guys exactly how that is going to impact the market. But my question to you is that I need you to let me know down in the comment section below is that how do you think the markets are going to react to what Powell had said yesterday, and do you think the Feds are likely to come through with another interest rate hike before the end of the year? Now, the headline over here says says inflation is still too high and lower economic growth is likely needed to bring it down. Now, we know last month, there were signs of the fact that the Fed was not going to hike interest rates. But if inflation is still too high, then that means the Fed will be forced to hike interest rates. Now, a very important key point over here, it says that he says that lower economic growth is likely needed. What that means is, once again, consumers are going to be at the better end of the stick. Because why? In order to bring down inflation, two things need to happen. People need to lose their jobs and interest rates needs to increase, right? Two things dedicated directly to hurting consumers. But what does this mean for the dollar index? It obviously means a stronger dollar because the Fed will become more aggressive with the key pointers that they made. And if you look at the S&P 500, it reacted negatively to that yesterday. Today, article from CNBC says the Dow fell 200 points after the 10-year yield crosses 5% for the first time since 2007. Now, if you remember the previous video that I did where I answered a guy's question and I said when the Treasury yields goes up, you can expect the interest rate for the Feds to hike these interest rates. And that is exactly why you see this negative reaction in the stock market. Now, if you're sitting there and you're wondering, okay, but how does interest rates impact the stock market? Well, a lot of the companies that are listed on the stock market, like the NASDAQ 100, these composite companies, they are made up of the 100 top tech companies in the world. What that means is that if interest rates are increased, this then pressurizes consumers to be able to spend less because their debt will increase, meaning that companies that are listed on the NASDAQ is less likely to make money because people will be too busy servicing their debt. And that is why the market will always react negatively to that, but the dollar index will always increase positively. The first slide over here says Jerome Powell acknowledged recent signs of cooling inflation. He says that he's well aware that he can see that inflation is coming down, but the central bank would be resolute in its commitment to its 2% mandate. What that basically means is that the Fed has got a target to bring down inflation to at least 2%, and we know that the Fed is still very far from that target that they need to reach. A lot of people speculated in the market last month when when the Feds came out and they said we are less likely to hike interest rates. We have come to the end of the term of our interest rate decisions. Then the market started thinking that this is positive. This time, Powell comes out and says, you know what, I was actually joking the last time, but we are not where we're supposed to be. So a lot of people is going to get hurt. And I feel sorry for the people in America that will have to go through all of these things that I am referring to here. It says that in a widely anticipated speech delivered to the Economic Club of New York, Powell evaded committing to a specific policy path, but gave no indication he was leaning toward a move to higher interest rates. And I've said this before and I will say it again. The Fed's job is to bring down inflation. The biggest tool that they have is to hike interest rates. Nou, waar kan jy vir my sê, last month people was like, yeah, but the Feds, I don't see the Feds hiking the interest rates. How else is the Feds going to tackle inflation if they don't hike the interest rates? And now Powell come out, he's all like, Powell's like, yeah, this guy was right, but we didn't want to listen to him. But he is right. The guys, you know what? It doesn't matter what these people are saying. You have to read through the economical data and you'll see exactly why the Feds need to do what they have to do to bring down inflation. It says here, as Powell spoke futures market, he raised any possibility of a rate hike in November and decreased the chances of a move even in December. He acknowledged the progress made towards bringing inflation back down to a manageable level, but stressed vigilance in pursuing the central bank's goal. What that say is that we know last month, again, when I refer to last month, people were under the impression, because Jerome Powell made it seem as if he was not going to hike those interest rates, right? But unfortunately, that is not how it works. If inflation had continued to increase, and because of that, the Jerome Powell will be forced to do the right thing, and the right thing is to make sure that you keep hiking those interest rates, right? You can't run away from these things. You can't pull a Dr. Matthew. You have to do the right thing, and the right thing is you have to address the situation hands-on, and that is exactly what Mr. Powell has to do over here. He says inflation is still too high. Now, if it's so high, why do you make people believe that you do not have to hike the interest rates? And a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably towards our goal. Powell said in prepared remarks, we cannot yet know how long these lower readings will persist or where inflation will settle over the coming quarters. He says, while the path is likely to be bumpy and take some time, my colleagues and I are united in our commitment to bring down inflation sustainably to 2%. Now, if you don't know where inflation is a little bit far from 2%, right? But it made some very good progress over the years. But if they are committed to hitting their target, then again, I will say this, and I've said it before, the dollar index has still got massive room in order for the markets to increase. Yeah, I did this analysis yesterday for the Nasdaq. The market started to take a dump exactly as anticipated, and this is going to have that ripple effect. The S&P 500, the Dow Jones, they're all starting to see this move to the downside. They're all just dipping. There, boom, break below the structure is going to complete an information. But this I will do for you guys tomorrow. Meta of the story is Powell came out yesterday. He changed his story for last month, and now he's saying that because inflation is so high, we spoke to the central bank and we might have to bring up those interest rates again. Remember, the only way to bring down inflation is to hike interest rates. Hiking interest rates puts pressure on a lot of companies because consumers are less likely to spend. The purpose to hike interest rates is to discourage consumers to spend, to bring down inflation. And if people are not spending, companies are making money, so you can't pay out people's salaries, and that means people need to lose their jobs, and that is what's going to happen. That is it from my side. I'll see you guys in the massive new breakdown tomorrow. Please, if you did enjoy the video and you would like to know more about these news events, please do consider subscribing. If you enjoyed the video, if you've learned something here today, please like the video. That's all from our side. Thank you for your time. Have a beautiful weekend. And as always, cheers for ears.